I'm Dan Jowett, the CEO of Openmarkets, and this is the second in a series of videos where we're talking to some of Australia's leading fintech providers across both trading and wealth management. So this is the second in our series, and Travis, I'm delighted to welcome you to this today from sunny Perth. Maybe before I jump into some questions, you could give us a quick rundown of yourself and your business, Marketech.
Sure, thanks, Dan. Look, Marketech's been around for a long time. We were in an article the other day where someone referred to us as tech veterans, which is a little different to the way that we see ourselves. But originally, Marketech was a CFD technology and trading company. I think it was the first platform to offer zero brokerage and really disrupt the CFD trading world back in the early 2000s. Pivoted across towards, I suppose, the ASX and broader market technology a few years ago. And as you know, we've also now moved that technology into the online trading space using Openmarkets as our settlement provider. So we're a public unlisted company. We're primarily a tech company that's been really, I suppose, running an online trading company on the side to try and prove the tech that we have. And then the next step will be scaling that up.
Yeah. So when you mention in the online trading space there, I think you don't really see yourselves as one of those discount brokers. First and foremost, you see yourselves as that technology provider to help with access to the market.
Look, we think that's where the real opportunity for us lay. There's a lot of discount brokers, as you call them now. And in the Australian sense, that often means removing market data from the platform, or certainly that immediacy of market data. We wanted to build something that was for that, more serious and possibly active or data-driven investor, and obviously to try and aggregate enormous amounts of market data and then put it not just on a PC but also on a mobile phone. It was really pushing through that wall of technology that's also still quite new. We also needed, access to things like the APIs that Openmarkets have, and in fact, for companies like Openmarkets to exist, in order to have the separation between the technology and the low-cost trading. So we're sort of, I suppose, fitting in that space that is sub-stockbroker, but still requires, I suppose, very much a market that looks like the stockbroker would see.
Yeah. So trading technology business like yours, as we said, quite different to, let's call it a discount trading side. And one of the things, it's on the first podcast we did with Nick from Perla, they have a niche point around their business, get rich slow. I'm sure you're across that as well, but your business quite different to that. So you've got much more active traders, I think, coming through your business. So tell us a little bit about the demographic there. Are they trading every day? Have you got a gender bias, a location across Australia? Where do these customers come from?
So we threw the doors open to see what sort of clients we would get. And I think that's been quite interesting for us because we couldn't really put our finger on what we thought our client would be for this sort of product. We sort of figured they would probably be older, they would probably be wealthier, they would probably be more active. But really what we've landed on, the common theme, regardless of age or net wealth or volume, is that they seem to be more serious about the market, and they seem to need the market data and the tools that there are that will help them invest in the way that they want to invest. And I think we've mentioned to you before, Dan, we've got quite a few people that will use our platform, but they're only using it for the market data. They're not even trading through the platform. But you're right, the average trader, I think if we take the sort of the small data set that we've got and divide it by the volume that we're doing, the average account's doing about $140,000 worth of turnover a month, which is broken up on average between sort of 12 and 16 trades of, typically around sort of $12,000 or $13,000. So we've got a combo. We've got some of those people that, they might do 40 trades a day. But at the flip side, you might also have someone that's running a huge self-managed super fund, and they might just be moving $500,000 worth of ANZ from into National Bank, and they're trying to maximise the value that they get for that trade. So like I said, on average, they're certainly a more established investor.
Yeah, and as well as the typical market data content that your customers and the traders are looking for that you provide. You've really recently started to introduce some different type of content to give those customers not necessarily an edge, but a bit more information. The partnership with Ausbiz is a good example. Tell us a bit about that.
So what we've realised that one of the big challenges for an investor is time. Typically, unless they're a full service stockbroker and they've got time to stare at the screen all day, they're trying to follow hundreds, if not thousands, of different investments at any given time. Since the dawn of the internet, what we've found is that information has become increasingly decentralized. So, just myself, there'd be sort of 20 or 30 emails that would be sitting in my inbox every morning. Now, I'd like to be able to read them all, but it's just not possible to consume that amount of info. And obviously, since the COVID bull market, there've been an enormous number of stock market related websites that have popped up, and investor relations groups, and video interviews, podcasts, third-party research. So what we wanted to do, rather than just purely be the market data and have people have to leave the market to go and review all of these other information sources, we started building them into the platform. So we've now got 12 different market media partners embedded, which includes being able to go to a live streaming conference, being able to read research about companies that aren't covered by the big houses. Articles filling in a bit of info around the edges because the ASX news releases are getting a bit hard to read. So then what we've done is we've linked all of that to mobile alerts and then saved it against the company. So we're building this library of data, but we're also setting it up so that someone can just say, I'm interested in all of these different companies, put their phone back in their pocket, and it goes ping when someone says something about it. So they're not having to spend all of this time each day going around the internet looking for all of these different news sources that can potentially move the market for them.
Yeah, and when you think about all that different, all those different data points that you talked about there, research reports, market content coming through, customers trading and interacting with the Marketech platform, that begs the obvious question now these days: what are you thinking about with AI for that? Is that on the roadmap? How are you thinking about that as a business?
I'm always a little bit cynical about new tech. I think when you've got an older audience, we don't need the typical large language model where someone can just say, tell me about BHP. They already have that underlying level of knowledge, and obviously you can just go to any website now and type that in. I think you've hit the nail on the head. I think by having access to live streaming market data and all of the ASX news releases, and now all of the sort of the pieces that fit around the research, the opinion pieces, and more importantly, user behavior data, I think we'll end up being able to do something very interesting with AI in the future. I'm just not sure that it's there just yet. I always take it back to what a full service stockbroker does. And one of the reasons that people still use full service stockbrokers is because if you ring them up and say, I want to buy this stock, the first thing they'll say is, are you sure? And so if we can get something that just says, are you sure? That stock would appear to be going down at the rate of knots. It might continue to go down, and based on these technical indicators, perhaps you could just wait a minute or two. I think that would be quite useful. But I think we'll just wait and see how it maps out.
Yeah, we're certainly seeing that in a lot of conversations we're having with our other fintech customers and partnerships, and how we think about it here at Open Markets, because you can run the risk of jumping too quickly into something without really knowing what you're aiming for at the other end, and that often only ends one way.
Most of the people that you speak to, for obvious reasons, are brand new in AI as well, and so you've got to be careful that you don't end up funding someone else's educational journey before they spit a product out for you. But look, there's a lot of companies that are doing work in the periphery with a specific segment. So we're speaking to them and saying, look, we're going to end up having to build something like this. Would it make more sense if we partnered up? We can take your product like we've done with the media content. We've already done something similar with Bridgewise, which was an Israeli tech company, where they're taking the market data and ranking companies based on certain metrics. And then at the bottom of that, it spits out we see this company is about a 92 out of 100 on this, or 93, but 89 here and a 4. So rather than having to, I suppose, build every piece of innovative tech, we can take other people's innovative tech and embed it into our platform. So they then benefit from everything that we've built, and we benefit from everything that they've built without having to, replicate or compete with each other.
Yeah, sounds good. Well, look, Travis, we're just about coming up for time. Thank you very much for joining us on this video, second in our series, and look forward to catching up with you soon.
Brilliant. All right. Thanks, Dan.